In this video, we're going to tell you a little bit about why you may reconsider trying to beat PDT versus investing in cryptocurrencies. Guys, let's talk about a few things here. Should you cash out on possible crypto gains in order to have enough to then day trade without having to worry about PDT? We're going to touch crypto investing as well. Obviously, very important topic and topical topic these days. And why not? Why can't we do both? Is there a problem with doing both at the same time? Neil, kick us off here. This is an interesting topic because we got an inquiry from a viewer not too long ago suggesting that he was in a situation where, you know, he spent his entire life really wanting to day trade, but never had enough money to get past the PDT rule, which is obviously $25,000. Thanks to some luck in the crypto markets, he has now been able to accumulate that kind of a bankroll. His question, essentially, should he pull out his entire crypto investments and focus on day trading because he's now over PDT?
So here's what I would say. Probably, I don't even know if this is what someone would want to hear. Pull out your entire crypto investment that you've gained on to start and put it all into day trading. My answer would be no. Right? Like, and I'm a trader, and I'm someone who gives people advice, and this is what I trade, this is what I do as a day trader. I train traders all the time, but everything, no. A portion, certainly that makes sense. If you've had the benefit to have done very, very well in crypto, as we look at, you know, how Bitcoin has done over the last, you know, sort of, I mean, months, you could say fantastic because you've had almost a double up on the last little move here. But, you know, realistically over the last few years, you know, there's some crypto fortunes that have been made. And if you've had the ability to invest in it and do well, whether we're talking about 5%, 10%, or you've been all in on it, you know, it's always reckless to trade with 100% of your wealth. Now, under the assumption that maybe, okay, those gains only represent 10% of your wealth, then it might make sense to go ahead and do that. Because the truth about day trading is that most day traders fail. So you always want to make sure that you are starting out with an amount of money that you can afford to lose. And in this particular case, as long as you're being reasonable about that, I think it's going to make some sense. The other thing I want to say is, if you've been treating your crypto investments as investments for the long term, and you believe in it, then why would you ever get out of everything? Right? Like liquidating it all just randomly because you hit a number that you can beat PDT, that it should always have something to do fundamentally with your investment. If you have some reason to believe that if you're all in on Bitcoin, that from here at 50,000, I'm 100% convinced that it's about to crater. I don't think that's true, but if you believe that, then you would maybe pull everything out. Pulling everything out of an investment simply because you hit an arbitrary number that, oh, well, I wanted to have 25,000 to get past the PDT rule, I don't think that's a reasonable way to treat your investments. Now, you can definitely have goals where once my portfolio reaches X, I will pull out a portion of it so I can go on a vacation with my trading account, or I can treat myself to this because my account gets up so much. Those are all perfectly reasonable things to do, and I know a lot of traders have done those in the past, but pulling everything out of what clearly, if you've been all in on crypto, I'm getting the sense, I don't think that makes a heck of a lot of sense to do. It's not a reasonable decision as to why you would cover. Certainly taking out a piece, rewarding yourself with it, and saying your goal is to be a day trader, knock yourself out. But then from there, Arun, make sure you take the right steps into understanding what it takes to become a day trader, and then treat it seriously like a job, not just that fun money because you're throwing gains at it, therefore you're playing with house money. Don't treat it that way.
Yeah, absolutely. You know, when it comes down to financial management, at the end of the day, all this is financial management, right? You've done well in one sector. What do you do now? You have a goal that you wanted to achieve in another part. Can you take some money out of your crypto gains and move it into a trading account? The reality is, if you're just starting to day trade, it's not going to be that profitable off the get-go, right? You're going to lose some money, and that's the reality of the situation. Trading is not easy. If you're lucky enough to have made money, I would try to protect as much as possible. At the same time, allow yourself to learn new things. Crypto is providing opportunities for a lot of people to make a lot of money. So when you make that money, you've got to save some of it, and you can put some back into the market. Now, moving some of that, let's call it the risk side of your investment, into day trading and try to make some money intraday. That's a brand new skill set. That's going to take some time. So just be prepared that some of the money you move into your day trading account will be lost. But I wouldn't move it all, because you want to spread out into as many things as possible in terms of diversification. You hear diversification across the board from any financial guru, and that really is the case, right? You need to diversify your risk away from just one thing. Now, if crypto is your high risk situation, or crypto is your long-term investment, then let's call day trading your short-term investment, or your daily trading ability, or your ability to trade intraday, or you can call that day trading as your high-risk side of things. The reality is, just spread your money out and just protect yourself from yourself. That is a big thing, because you will make a lot of mistakes, and there will be a lot of mistakes that are costly. So just spread it out as much as you can, but don't just dump one to the other. It's got to be spread out, not evenly, but it does have to be spread out however you see fit. Just diversify.
I'm going to echo some of these sentiments here, and I also want to get your guys' opinion on a question as well. But first, I simply want to add to this that, when you first start day trading, even if you've been kind of mingling or dabbling a little bit over the past 6 months to a year, or maybe even 2 years, it's going to take you years before you get to a point where you want to and have the ability to take multiple trades over multiple days. So why not focus on mastering one setup? If there's one type of trade that makes a lot of sense to you, you may only see a perfect setup once, twice, maybe 3 or 4 times even in a week, but that doesn't mean you have to take 50 trades or 50 executions over one trading session. So I'm going to echo, as I said, some of the sentiment here and say, why not do both? Why not pull out as much as you need to, take 2 trades a week, and find that one setup that makes the most sense to you? Guys, I want your opinion here. If you were to find one of those setups, if we could leave this video with, one idea that might be an idea that they could take and say, okay, I'm going to find one setup, one trade going forward over, the next coming months, what would that be?
I think, and we've always sort of said this is the easy. It's not about it being the easiest. I always hate that word. I know we always start off with that. We talk about these gap and then break trades, and one of the reasons why I like them, one of the reasons I love them so much is that it's not that they're binary, but it's more so that it's very trackable in terms of what your results is. And when I use the word binary, it's something that is not very discretionary. Like, you'll have hard levels that you have your stop set at, both to get in and then also to get out. And then it's a good starting point, because it gets you away from too much discretion and then making a trade really hard to track. And I think that's the key thing. Like, if you want to develop one strategy, you want to make sure your record keeping is good. Like, you don't want there to be conditions around it that are like, oh, but I was reading the tape here, I saw deceleration. Like, don't get me wrong. Those are all reasons that get used by traders that have been trading for years. I'll say it all the time on the live show, but you can't really start there, because those are things that are almost an instinct, and they get to that point. So you start with something as basic as, okay, stock is gapping one way or the other. Like in this particular case, Ulta Beauty, post earnings, you get a gap break, you have this consolidation here in the aftermarket at a 407. It's a very clean break level. If you're looking for a short trade there, your stop placement gets right into that 414. You kind of know where you're getting in, you know where you're going to be getting out. I obviously did a bit of a dip buy, which had muted success here. I actually missed that short trade. It was tricky with the stop, but it's the kind of thing where you know exactly where you're getting in and getting out. It works in both directions. Usually there's catalysts for it. A lot of times post-earnings or announcements, they don't always set up perfectly every single day, but usually once or twice a week you're going to be able to find them, and that's where I think we should lean into.
Yeah, for me, I like to keep things very simple. As a new trader, look for sideways action and then a move outside of that action. I'm just going to keep it as simple as possible. As an example, Airbnb, this is one of the trades I took today. You see the sideways action. After we had that huge run up, we went sideways for a little bit, and then we broke through that sideways range to the downside. And if you were to take that short, that's an easy $3 winner. Let's keep it simple. That's the kind of setup I'm looking for. Another example of the same type of move, DKS to the upside. In this case, 134 breaks to the upside, straight up to 136, right? As a new trader, you want to learn and try to keep things as simple as possible. And I think this is one of those looks that it doesn't get any easier. So just maybe look for these to start off, and then from there on out, you can expand your trading skills.
All right, we'll wrap it up at that, guys. But great information and a great question, I think, as well. Don't be afraid. The lesson here: don't be afraid to do both, and take your time and understand, how much of an investment when it comes to time is required to get to a point where you will actually be taking multiple executions within one trading session. Hope that helps. Here's V.
Hey guys, thank you for sharing these useful tips. Dear viewers, please subscribe to this channel to see more great videos.